The stock market is at its all-time high, and it is undeniable. Many economists and high-level investors have cautioned the public on the possibility of the market being on a bubble. The question, it seems, is not if the bubble will pop, but when will the bubble pop? Hello everyone, this is Quest for Wealth, where we grow and build our wealth together. According to Harry Dent, we could expect a market correction of 40% by the first half of the year 2021. Harry Dent is an American author and founder of H.S. Dent Investment Management. Whether this will indeed occur or not, only time will tell. But all the lines and cues seem to point to the same direction, that the stock market is indeed on an epic bubble. But what exactly is a stock market bubble to all beginners out there? The market bubble forms when the value of an individual stock, segment of the market, or the market as a whole become overvalued relative to its real and true value. So let us investigate some facts. The S&P 500 make up 75% of the US equity market. 75%. Now, for all the beginners out there, the equity market is the same as the stock market. Both of them means the purchase and sale of share ownership on publicly traded companies. Two important factors to compare are the growth of stocks and the intrinsic value of the stocks. The S&P 500 growth of stocks outperformed the value of the stocks by 51%. This means indeed that the price of the S&P 500 fund is disproportionate in comparison to its actual value, and hence the clear possibility that the market is indeed on a bubble. Dig deeper into this monster. We can take Tesla as an example. Tesla is one of the hottest stocks in the market today, but then, with the data and the numbers I will show you, you will begin to question if its market price correctly or fairly represents its intrinsic value. The PE ratio relates to the company's share price to its earnings per share. A high PE ratio could mean that a company's stock is overvalued or that the investors are overly positive on the future of the performance of the company. Tesla's PE ratio from 2018 until first quarter of 2020 was 0. And why was it 0? You may ask. Because it did not have any income output. As a matter of fact, it has been losing money year on year. As of December 2020, it has a 180% year-on-year decline on its income. Yet even with these figures, the Tesla stock price surged and is continuously surging from $48 per share in the last quarter of 2019 to a staggering $854 per share in February. Tesla's stock price has been surging, although its year-on-year income declined by 180% in 2020. The current employment situation is another fundamental factor to consider. Due to COVID-19, many small and medium filed for Chapter 11, and many of those businesses will not come back to life. Unemployment rate is ripe. Bankruptcy is ripe. But the stock market is at its all-time high. These factors are very, very disproportionate. Hence, the question of when the bubble pops and not if the bubble pops. Be ready, be vigilant, and consider that the best time to buy is when the merchandise is on sale.